Welcome back, guys. It's Alon, and thank you for joining me here at Acorn Productions for another weekly recap. Now, I'm quite excited. Today is actually quite a good day. So, we're actually on our biggest gain for any month ever. It's been actually a very good week for us since we last spoke. We're up maybe 4 or 5% since then, and the portfolio is definitely looking healthier. We're looking to a double-digit year, and we're looking at a chance, as slight as it may be, to get to our goal and catch up this year. And our goal is to get this portfolio between 20 and 40%. I know it's a bit extreme and maybe not possible, but I believe it is. With the right market conditions, with enough good options, I think it should be plausible with a good strategy. So that's what we're going for here. So I'm excited to still have the opportunity for that. And I'm also excited to let you guys know that at the end of this month, I have been evaluating the portfolio, and to start next year, because we only change our portfolio every 2 months. So our portfolio at the end of this month will be what takes us into next year. And I have a really good feeling about next year. And I have a really good idea for the core part of our portfolio, the chest, about how it can perform better. Because I want to recap this year, I want to see what worked, what didn't work, what's going to change for next year. And I think the chest, the core part of our portfolio, so what I mean by that, guys, the core part of our portfolio at the moment is ETFs. So this is the India ETF, the India stock market. This is the Warren Buffett's company. It's a collection of companies, mostly Apple. We got VGT, the information trust. QQQ, these are well performers. That's a very good semiconductor trust. So this is anything but the US. So this is sort of what makes up our chest. Oh, and guys, if you're looking, we're doing really, really good this month. But just to cap that off before we go into this, I want to make the chest something that's going to beat the market, not something that's going to match the market. Because at the moment now, what our chest is doing is matching the market with these returns. Now, if this portfolio is going to beat the market, which 20 to 40% is definitely beating the market, I believe the core part of the strategy needs to be better than the market, or it's putting too much pressure on the other parts of the portfolio, particularly the horns. So I really want the main part of the portfolio to work with us as well, and I've got a way to keep it genuine to its goals and its nature, and I believe get us to our goals. So I'm going to be letting you guys know that with the end of the month recap, so I'm really looking forward to that. Now, on other notes, let's have a look at some of the other things. So at the top, we still have micro strategies. Our 6% of our portfolio that was invested is now 8%. Similarly with Bitcoin here, but surprisingly, out of nowhere, so after the main cryptos rose, if you guys remember last week, Bitcoin was the main riser. You can see with a little bit of a delay, all the other ones shooting up. In particular, Matic, I guess, is got more gains than Bitcoin in this case. It was definitely a riskier investment, and I'm definitely happy with that. DOT as well, one of our smaller, riskier investments, has shot up as well. Hasn't beat Bitcoin, if you notice. Algo, my darling, hopefully one day will work well for me. That's done very well as well. And Microsoft surprisingly just chugging away this month as well. I'm not familiar, there's probably some sort of news that made that. Ethereum doing a bit better, it is sort of lagging behind. But you can see a massive continuous improvement in crypto. So crypto has been a main driver for us, and also these crypto companies, so Coinbase and MicroStrategies essentially. So these two, essentially we've got 30% exposure to the crypto market, 10% through companies, 20% directly in crypto, because I think crypto is definitely something worth having exposure to, especially with an aggressive growth portfolio like this one. So that's very interesting. But as I was saying, guys, I've been recapping, and most of the profits from this year have been from the horns. So I think I want to change that. So that's something I'm working on now. So I'm very excited with that. Surprisingly, silver doing well. That's very nice. And there's not much red in the portfolio. You can see we've got 2 companies that I picked, which, to be fair, these companies were on the way down with the chart. We can have a look at it, but I don't think it's that important. They were on the way down on the chart, and I was looking at value, and I'm not sure value plays are what's going to consistently take me to where I want to go. The time period might be too long to see the value in those. But we'll see. Estée Lauder's might be. See, I'm assessing it as undervalued, but you know, a 5-year-old could look at that chart and be worried. Anyway, guys, thank you so much for tuning in today. I'm gonna up the content, and this is probably just gonna be a video people can watch back to in the future. I don't think many people are watching me now. But next year is going to be very exciting, and I'm very excited for it. And I think this portfolio is going to achieve our goals next year. Maybe a little bit better. I've got a great feeling, and I'm excited to put as much of my money into this portfolio as well.